Imagine investing millions into a startup, only to discover later that the company's success story was largely fabricated. This is exactly the explosive situation unfolding between Canadian venture capital fund, the Group Ventures, TGV, and the Israeli startup GEOX. But here's where it gets controversial. TGV is now suing GEOX and its directors, demanding to annul a $1.5 million investment deal, claiming they were misled by false promises and inflated figures. Back in 2024, GEOX launched a Series A funding round, painting a picture of rapid growth and lucrative customer contracts that made it seem like a golden opportunity. According to TGV's lawsuit, these claims were not just occasional exaggerations, but part of a systematic pattern of deception. The startup reportedly overstated its revenues, boasted about deals with major clients that didn't actually exist, and projected an ambitious path to an IPO by 2029. This rosy narrative convinced TGV to invest $1.5 million, acquiring roughly 54,000 shares, especially after seeing that Flashpoint Venture Capital had already committed $8 million based on the same data. However, the fund now alleges that GEOX's portrayal was far from reality. Instead of thriving, the company was losing customers, burning through about $500,000 monthly, and sinking deeper into financial trouble. The annual recurring revenue ARR numbers were allegedly inflated by around 50%, and the supposed agreements with key customers were fabricated. When TGV requested detailed documentation to verify these claims, GEOX reportedly provided only incomplete information, raising further suspicions. Adding another layer to the story, in September 2024, GEOX announced a $19 million investment round, naming investors like Flashpoint, the RD partner SureTech, and private backers Ariel Meislos and Noam Lanier. This announcement seemed to reinforce the company's strong position, yet the lawsuit suggests otherwise. For context, GEOX was founded in 2018 by CEO Itzik Lavie, CTO Eli Lavie, and Guy Attar. The company specializes in a cutting-edge platform that assesses risks to real estate assets from climate-related disasters. Using 3D analysis of aerial images, GEOX's technology automatically evaluates properties to predict potential damage, providing valuable data for ensuring both private and commercial buildings. This includes detailed information such as roof size, type, condition, and slope. In response to the lawsuit, GEOX expressed optimism about its progress and dismissed the claim as coming from a dissatisfied investor. They stated they are reviewing the legal documents and will respond appropriately. This case raises important questions. How common is it for startups to present overly optimistic data to attract investors? Should investors conduct deeper due diligence before committing funds? And what responsibility do company directors have when their personal assets might be on the line if investment agreements are not honored? What do you think? Is this a clear-cut case of investor deception, or could there be more nuance behind the scenes? Share your thoughts and join the conversation below.